So we have question 5 from the Modern Accounting textbook. We've laid out the basics of the question with the months involved, and we have the opening balance sheet and the two sides added to be the same. So let's look at the first one. 1st of January, land and buildings revalued 960, which consists of land now valued at 60. The reason why they tell you about the land is that when I'm going to depreciate later on in the question, that I'm not depreciating the land, I'm only depreciating the buildings when the buildings are worth 900 then. So my land and buildings is currently worth this minus my provision for depreciation. So what I'm going to do is I'm going to increase the value of the land and buildings, and I'm going to cancel the depreciation and put all of this down into a revaluation reserve. Okay, so the buildings are 660 now, they're going to go up to 960, so we're going to add 300 onto the buildings. I'm going to cancel all the provision for depreciation. It's put in here as a minus in the assets, so I'll put it in as a plus to get rid of it. So that means that my revaluation reserve has 348 in it. Next one, February. We bought a new business consisting of, so I'm assuming that there's going to be goodwill involved in this, because he probably paid over the odds for it, because he's paying for the reputation, and there's probably going to be share premium. So he bought buildings 250, stock 22, equipment 28, creditors 10 grand. And he paid for granting 300,000 shares. But just so we know that the assets are worth 300, the liabilities 10. So we're buying something that's actually worth 290, and he paid for it by giving more than 290, which is where the goodwill comes from. You're paying extra for it because of the reputation. So the shares are 300,000, and the premium then is going to be 300,000 multiplied by 0.05. So that's our share premium. So he gave 315 for something that was worth 290, and the difference then therefore is goodwill. So we can work this out, because we know we've got 325 in our liabilities at this stage, so therefore there must be 25 grand in our goodwill to make the two sides add up to be the same. We bought goods and credit from R. Williams for 10 grand, less trade discount of 4%. So we bought goods, which means our stock goes up by the amount that we spent. Those goods are worth 10 grand. Okay, we owe our creditors a little bit less than 10 grand because they're giving us a discount. So the creditors, we're adding on 10 grand multiplied by 0.96. So that's taking away the discount. And then the difference then is going to be discount received, which is a plus in our profit and loss balance. Next one, we received a grant from the County Enterprise Board of 3 grand. Now this is an income, so we're getting this once. It's not like the County Enterprise Board are investing in the business and technically we owe that money back to them. It's money that we're getting that we're going to keep, so it's an income. So that means that it's going to be in the profit and losses as a plus. And our bank then is going to go up by 3 grand. Goods bought by McCormick were returned. Owing to delay, credit note was issued showing a deduction of 5%. So the goods we bought for 2.4 were returned. So I'm going to take that out. Let's quickly check. So this is June. Okay. So we're going to take away 2,400 because that's what the goods originally bought for. And technically, if I return those goods, well then my creditor should go down by the same amount, but it's not going down by the same amount because we've been charged a restocking charge. So the restocking charge is 5% of the invoice. So that means that the creditors are going down by 2,400 multiplied by 95%. So the creditors are going down by that. And the profit and loss balance then is going to be the difference, which is 120. That makes the two sides out to be the same. So, and remember, this is profit and loss balance, by the way, is a minus. Sorry, that's a mistake of mine. Sorry, so the creditors, sorry, I owe 2,280 less, so that's going to have to be a minus number. So minus 2280, and then we have an expense, so our profit goes down by 120. Next one. Pay dividend 6 cents per share to the shareholders. So just quickly checking how many shares we've got so far. So we've got the 580 plus the 300 that we issued. Okay, so there's 880,000 shares so far. So the bank figure then is going to be paying out 880 multiplied by 6 cents per share. So that's 0.06. So 52,800, and that is going to be a minus against my profits, my profit and loss balance equals 52,800. Okay. A motor car costing 25, trading against a new car costing 36, and allowance was made and depreciation to date. So I'm going to have to work out the profit or loss on disposal, and that's going to be the figure to make the two sides added to be the same. So the car cost 25, trading against the new one costing 36. So I'm up here to motor vehicles. So equals, we're taking away the one that cost 25, and we're adding in the one that cost 36. Okay. We had an allowance made of 8 grand was made on the old car. Depreciation on the old van was 14 grand. So I'm going to cancel the depreciation on the one that I'm getting rid of. So that was originally put in as a minus, so to get rid of it, it's a plus, 14 grand. And the allowance of 8 for the old car, that means when I traded it in, they said the old one was worth 8. So that means that when I bought the new thing for 36 and I got an allowance of 8, it means I went and wrote a check from the bank for 8 taken away from 36, which is 28. So this is in bank, and we got, so it's a minus 28 grand. So that means that the trading allowance we got was we had a loss of 3 grand. So our profit and loss balance is a loss of 3 grand. Where did 3 grand come from? I basically said, well, what's the net effect in all of the assets? Another way we could look at it is, well, what's the thing worth? The car cost 28, or 25. So we're getting rid of something that cost 25, and depreciation to date was 14. So therefore, 25 minus 14 means its net book value, what it really was worth, was 11, and I got an allowance only of 8 of it. So that's where I made a loss of 3 grand. Moving on to the next one. Depreciate the buildings 2% of cost per annum. Okay, so I'm going to go up to my buildings, so land and buildings, and I'm going to put this into my provision for depreciation account. Now, the buildings, remember we had, when we did our revaluation way back, they valued the land at 60. Okay, so that meant that the buildings were worth 900. Okay, and so I'm just going to do this at the top here. So we have 900, and then we got a new building worth 250. Okay, so all of that, then we have to multiply that by 0.02. I think it's 2% cost per annum. So 23 grand depreciation. The depreciation on motor vehicles was 16 grand. So we have minus 16 grand there. So that's more liability been added on, and equipment is 4.5. So provision for depreciation equipment minus 4.5. So the total figure there is 43 grand. So all of that is an expense, and I'll just put all that number in together. 43,500. Okay, so that's that. So now we finish off the question by adding everything along. So we start with the first one. So everything that we have in the sorry, that's wrong. So everything from the opening balance sheet all the way down to the last transaction. So that's the total limit for land and buildings. And then, because I'm a very lazy person, I'm just going to add all the way along there and just put the formula in. It's going to do all the maths for me. And hopefully, if I've done it right, I'll end up with the same figure in both. And luckily enough, it does. It works. I hope that makes sense to you.